Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position along with your favorite beverage to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Andy J., Gordon S., Sean M., and Cindy W. We have a new guest on the program today. Mr. Tom Meyer has joined us. Tom is the president and CEO of Archer Exploration, an exploration junior focused primarily on nickel projects with its Grasset nickel project in Quebec that has an existing nickel deposit, as well as multiple exploration projects in the Sudbury Basin, Ontario. Archer Exploration is listed on the Canadian Securities Exchange under the symbol RCHR and also on the US OTC markets under the symbol RCHRF. Tom, it's good to have you on the program. Welcome.
Well, thank you very much. Happy to be here.
Yeah, Tom, it's good to have you on the program here and get a little bit of introduction here. Started off with Archer Exploration, which looks interesting. Why don't we just have you kick it off here, Tom, with you giving us your background and experience in the natural resource sector?
Sure, happy to do that. I'm a metallurgist by training and spent some time, very early days, actually doing some diamond exploration, but also with what is now part of Vale and what is part of Glencore through Inco and Falconbridge, respectively. Spent almost a little over 20 years plus in the capital markets as a mining equity research analyst. I covered the Latin American mining space, the US steel space, and then I moved back to Canada in the early 2000s and covering base metals for a number of brokers and banks, and recently signed on to Archer to head up the exploration programs that we have in Quebec and also in Ontario back in September of last year. A lot of experience on the kind of metallurgy side, on the capital market side, and just having a phenomenal opportunity to look at a number of projects around the world, and was very excited to join Archer because what we've got in our portfolio is arguably outstanding. And we're happy to get into that in a little bit more detail as our talk unfolds.
Tom, that sounds good. Pretty diverse background there, and it must have been a reasonably compelling opportunity for you to step out with what you were doing to come over here and, talk briefly about the bigger picture on the fundamentals behind metals such as nickel at this point. Anything you can tell the audience specifically on supply and demand picture for nickel. Obviously, most folks probably know, at least our audience probably knows what nickel is primarily used for, but just talk about, why nickel and why now.
Yeah, well, why nickel? We're going through this kind of technological transformation phase, and we go through different cycles. And I think with the decarbonization agenda, which is behind us, and one of the key tailwinds, we're seeing a greater, much more, across the board, across all commodities, a much more metal intensive use of these metals as we decarbonize. But there's also just the backdrop of advancement, and whether you look at it in the aerospace sector, or as we develop more of these rockets and specialty metals that are required, the backdrop, kind of the macro for nickel, is very exciting. And I think one of the challenges, like unlike copper, which I think people can visualize copper wire and in its uses, nickel is, I find it quite interesting because it is, you could arguably, it's an additive to a lot of the metals that we use, and so it's not as visible as, say, copper is. And obviously stainless steel being a key market, historical key market, and specialty metals for nickel. But I think the go forward investment case for nickel and nickel demand is for more of the specialty applications as we get into the various battery technologies. So you're looking at a sector that is most likely on just even conservative estimates is going to double over the next 15, 20 years in terms of demand. And the main driver for that is the EV battery technology. But there's many other technologies that are kind of waiting in the wings that are yet to be divulged and maybe visibly small at this point, but have a lot of room to grow. But you have that backdrop against, I would say, a challenged supply. Nickel tends to be quite volatile in its price performance. And so what that typically means is that you get surges of exploration and development when the price is high, and the opposite is true when prices go low, as we saw like just 5-6 years ago in a depressed price environment. And I think with the tailwind of the decarbonization trend, we're in a situation now where I would argue that it's quite challenging for the nickel producers to expand production in order to keep up with that demand. And with the growing sources of nickel supply, say out of Indonesia, that's one of the obvious ones. Whether that's sustainable in the sense from an environmental front, or whether it is a solution to all the nickel demand, I have my doubts, and I think that's where nickel sulfides come into the picture, and in nickel sulfides in low risk political jurisdictions come into the picture. So it's actually quite exciting on the nickel front, and I think it's going to get much more attention than it has been in just over recent even months and years. So quite the exciting space.
Tom, it is quite interesting, and yeah, lots of challenges here, whether we're talking about jurisdictional, whether we're talking about permitting risk, regulatory. I mean, some jurisdictions are good in the sense that you can permit things reasonably quickly in a decent time and completely. And then other jurisdictions are rough for the sense of political instability and red tape jurisdictions in the sense that a lot of bureaucracy tends to tie things up and permitting processes that go way too long, 10 years, 7 years, what have you. There's no reason for that type of a time frame in most cases. Obviously, there's exceptions, but good points on a lot of this stuff here. And briefly, just your view on the battery technology component here. Nickel's inputs today versus the expected use of nickel in battery technology. Obviously, there's other uses like really robust with stainless steel, but also where nickel slides in with things like lithium. There's a lot of popularity around lithium right now and lithium's use in batteries. Talk about that and how you see nickel fitting in.
One of the easier and more visible ways to look at it is just with Tesla as a branded electric vehicle that gets quite a bit of attention, and all the kind of the other manufacturers catching up, and the public's desire to have and adopt more of the battery electric vehicles. But so that kind of that rise of electric vehicles is one of the key components, and this battery technology, this kind of high nickel cathode chemistries are gaining that popularity, and it is kind of crowds out some of the other technologies. Not to say that other technologies can't catch up, but given the kind of the energy density of these nickel, these high nickel cathode chemistries. The energy density is such that it does have an expanding application base as the market grows for these types of vehicles. And then when you expand beyond that, there's other larger scale battery applications for storage along the grid that is to be developed. But I watched it kind of from a bit of a distance, and to see what is going to kind of win out in the end, and the types of the batteries that are available for whether it's the passenger fleet, or more if we look at larger scale trucking. Then you can start thinking about on the nautical front with eventually fleets of boats, etc. We're still in this kind of expanding phase of the different types of battery technology. And my suspicion is that it's only as we kind of evolve our knowledge in that space, and it kind of ties in with lithium, that we're going to see more an increasing expanding applications and beyond just the kind of the visible trucks. But we've also have trucks, cars, and then around the house, whether it's lawn equipment and carrying just of just normal gas powered leaf blowers, etc., that kind of evolve into expanding applications for this the battery types.
Let's talk Archer here. Why don't you give us just a quick overview of the company and then we'll get into some specifics.
Archer Exploration, we're a Canadian exploration and development company, and our focus is on nickel sulfides. Our flagship project is the Grasset project in the Abitibi Greenstone Belt off the highway in Quebec. And that's the 80-20 rule for us. 80% of our focus and efforts are on Grasset, and it's expanding our resource base at Grasset. And that current resource is 5.5 million tons at 1.53% nickel equivalent. And that asset is 100% owned. Our other key, part of our portfolio is our land package in the Sudbury Basin. It's very large. It's actually the third largest land package in the Sudbury camp. We spend about 20% of our time, efforts, and money in Sudbury. More has to do with the fact that Grasset is that opportunity that we can add value because it is a recent vintage discovery. And the fact that Sudbury is an established camp, but the exploration there, in our view, and how we're attacking it is going to be much more appropriately paced and methodical. Whereas Grasset, it's kind of wide open in terms of not only the existing resource, but we're on a largely unexplored 23-kilometer ultramafic trend. So we're focused on growing our resource and ultimately demonstrating to the world that we've got a potentially world-class next large high-grade nickel mine. Now, it's very early days. Just want to make that clear. It's very early days, but we've got a lot of room to grow, and we're excited to kind of proceed along that path in the coming months and years.
Tom, give us a flavor for the capital structure in terms of the current shares outstanding, the cash on hand at this point, and then also major shareholders, including the management team, board, and insiders.
Sure. So we've got about 91 million shares outstanding at present. We ended the June quarter with $4.8 million in cash. Insiders and advisors, associates, we're just less than about 9% of the float. Wallbridge Mining is our largest shareholder. They own 19.9%. That is due to the fact that this, to a great extent, this nickel portfolio was deemed as non-core to Wallbridge, who's focused on their gold project in the Abitibi, which is a PEA level project. So they deemed their nickel portfolio non-core, and that's how we ended up with it. They retained the 19.9% interest, and then we have between retail and high net worth, there's almost another just short of 70%. It's a mix of retail and high net worth in that, and to a great extent, those are kind of long-term supportive shareholders that we have on our register.
And Tom, any expectation here with the exploration program that's ongoing? Where do you see the runway in terms of current cash position and when you guys might need to finance?
The end of the quarter of the June quarter with 4.8 million in cash. We raised back in November. We raised $10 million, a little over $10 million. Of that 10 million, we raised 7.2 million of flow through, and in Canada, that's tax advantage exploration dollars. And so we will spend that 7.2 through our program in 2023. And then based on where we end up with results of the existing program, which are quite exciting, and our plans for 2024, then we'd look to consider our funding opportunities for the 2024 season, which I guess we can get into, but it's quite exciting prospects for 2024.
Very well. Yeah, we'll talk about that here in just a moment. How about any key people at the company in terms of folks you'd like to mention that are helping to, advance the projects along here?
Yeah, so I mentioned a few of them. So our VP exploration, Jack Gauthier, has over 40 years of experience, and he's your honest to goodness focused exploration guy. He likes getting into the weeds, so to speak. And we came out of the gate last November and put together a pretty aggressive program for 2023, and that was, I would say, very, very successful. And so he's an absolutely solid explorationist. Uh, Very pleased to have him and his experience and adding the tremendous value. And he brings not only his skill sets that he carries with him, but his Rolodex is quite extensive, so we can kind of tag in interesting help as we need it, as we embark on and proceed with our program. Our Chief Financial Officer, Sherry Roberge, over 15 years experience in the mining space with resource exploration and development companies, so a key asset. And she joined us just around PDAC time in March. And then Wes Short, our Vice President Corporate Development, who's got quite a very interesting experience in the uranium space and moving projects and companies from early stage into kind of the more advanced companies. So solid kind of management team. And then I'll mention, I try not to scare people, but nickel is a tough space to be in. It is challenging. It has exploration, which is somewhat unique. So it's very unlike, to a degree, very unlike anything you'd see, say, in the copper space with big porphyry systems or IOCG or sediment-hosted systems, and very different from gold as well. I would say that you sometimes you have these large um, lower grade nickel systems, which are quite interesting, and they're kind of approached from kind of a copper porphyry type approach with you got large capital intensive projects. And then you have that kind of the smaller kind of needle in the haystack where you spend some time and over a few years you develop into something quite exciting, or you can get lucky in the case, well, 30 years ago with the Voisey's Bay. So with the backdrop that nickel is somewhat different than conventional exploration techniques, and it does require a pretty unique skill set. One of the things that we did with Archer out of the gate is we assembled a technical advisory committee, and that's chaired by Dr. Neil O'Brien, who's formerly Senior Vice President Lundin Mining. Within that group, we've got academics, we've got expert geophysics, we've got very practical exploration type people that have experience in nickel exploration and development. So that technical advisory committee is a kind of a key hidden gem within the management group that allows us to leverage many, many years of experience from many, many different geographic perspectives on many, many different nickel sulfide type projects. So we have that in the background, guiding us and using it as a sounding board, and challenging how we should proceed with our exploration, not only at Grasset but also in Sudbury. So that's a key shout out, and kind of, I would say, a very distinguishing feature for Archer, and how we proceed with our exploration and finding more of these nickel sulfides and adding value for shareholders.
Thanks, Tom. That's an interesting team, and I do know Wes. I know he's over there at Cosa Resources presently as well, and with some of the former ISO Energy team. Um,
Exactly. Yes. Yeah.
Appreciate you sharing that information with us. Coming back just to the project, Grasset, just cover Wallbridge obviously turned it over to you guys, but just cover what you guys paid for consideration. Talk about the background of the project there, and then let's get into that exploration program.
Yeah, so the deemed consideration of about $53 million, and that's in contrast with our current market cap of just around 10 million Canadian right now. So we like the many in the junior exploration and development space kind of suffered some of the downdraft. But I think what is very interesting with this portfolio, and again, non-core to Wallbridge, Grasset was part of the Balmoral portfolio, and Balmoral was acquired by Wallbridge in around 20. Well, it was announced at PDAC in March 2020 and delisted. I think they closed it in July or August. But this project, Grasset, was discovered by Balmoral in 2012. The exploration team at Balmoral were expanding and searching for gold in the Abitibi. They did a 500-meter step out and I would say accidentally discovered nickel. And what is interesting with this, kind of one of these accidental discoveries, and they are rare, but in this case, it kind of opens up the idea for finding more nickel in the Greenstone Belt. And one of the challenges with exploration in this part of Quebec and along the belt is that there are no outcrops, so you're not going to stumble across this. The deposit is buried by 60 to 80 meters of glacial till, so it is blind, and so it kind of understandable that it was discovered by accident, because unless you were specifically looking for this type of deposit, you unlikely to have found it unless you accidentally discovered it, because the area has been well picked over for gold and also VMS. But this nickel discovery is somewhat unique in this area, and kind of excited to follow up more with that. But unlike some of the other nickel sulfide projects that you hear about from time to time, this one is unique in the sense that it is a 2012 vintage discovery. Balmoral had the opportunity, and they did a fantastic job exploring and developing the resource that we have today, that 5.5 million ton resource at 1.53% nickel equivalent. There's a lot more to be found, and Balmoral really didn't have the time or the wherewithal to kind of pursue that, because they disappeared in 2020 with the acquisition that Wallbridge took them out, and there was no work done by Wallbridge. So we've got a project that has got a great starting point, and now we're busy focusing on expanding that resource and looking for more along that 23-kilometer ultramafic trend that we control.
And Tom, cover the current exploration program here in terms of what you guys have planned remaining here, when you expect maybe some news out of this program, and then what the overall goal is to accomplish here.
I'll answer the last piece of your question first. The overall goal is to make Grasset bigger and better, and so objective to double, triple this resource. So how do you do that? So we started with a very methodical plan, and again, this speaks to many years of experience from our VP Exploration, Jack Gauthier, and just thinking, okay, what needs to be done in a methodical way to expand this resource. So we did a number of things, and out of the gate, starting with some geophysics, which is quite obvious to help us with some targeting along that trend. We also embarked on what they call a sonic drilling program for base of till sampling. Again, the deposit is buried under 60 to 80 meters of glacial till, so we've with a sonic drill drilled through the base to that base of that till and took some samples at the contact with the bedrock, and then drilled into the bedrock to get some geological understanding. So that will help us with targeting along the trend, which is a key kind of exploration technique when you're dealing with these glacial tills. And I think that led to the success that Anglo American had with the Sakatti nickel project in Finland. So that kind of lays the groundwork for more and for further follow-up. But our drilling campaign began in earnest in February, and we're wrapping it up now. So drilling was targeting the extension of the Grasset resource. So in your mind, picture kind of a flow channel of magma that would flow, no, not too different from a river if you want to picture it that way. And that flow channel over time was now tilted from horizontal to vertical. So within that channel, thinking that, oh, here's something that was vertical, here's something that was horizontal, it's now tilted vertically, and understanding the contact with the ultramafics. So our exploration on the drilling front was targeting extensions of the Grasset deposit at depth. So along the flow of this magma, we have proof of concept of this with our announcement back in June, on June 15th, where we intersected 1.82% nickel at over 4.6 meters. And this was in a part of the Grasset project that has not seen previously any drilling. So that discovery kind of expansion of that horizon, that H1 horizon, which is part of the Grasset resource of 5.5 billion tons, that's open on 200 meters on either side, no drilling, and so we'll be following that up soon. And with idea being that there's more to be found, we conducted some downhole electromagnetic surveys, so some geophysics, to help us target and look for other potential nickel sulfide bodies at depth. So until this hole that was drilled back in May and announced in June, the deepest intercept at Grasset was down to 775 meters at 2.76% nickel. That was over about half a meter. And the existing resource, that 5.5 billion tons, is only down to about 550, 600 meters. And so we're kind of wide open in terms of expanding that resource at depth. And so with the exploration success that we've had with drilling as announced back in June, and then our geophysical surveys that we've announced just not too recently on August the 17th, further points to some kind of drill-rich opportunities for us to follow up on.
Come back to just looking a little bit more big picture here. Talk about generally the economics on these nickel sulfide deposits. How big do they need to be? Talk about the grades a little bit, the recoveries, and then importantly, collectively, how good do they need to be to get the attention of a major?
Yeah, so I believe we're kind of on the cusp of getting that attention of the major, just because we're along this largely unexplored 23-kilometer trend, which is just ripe for exploration. And with the Grasset as we see it today, so the 5.5 million tons at 1.53% nickel equivalent is particularly interesting. I think if we were in Australia and run by and having an Australian mindset, we would be thinking hard about putting a mine plan and milling operation together. Our kind of Canadian view is we're going to do more work before we embark on that, because we want to understand that center of gravity of where best to locate the opportune place for milling mining potential in the future. So we're still early days, and we're going to be quite methodical in that approach. But as we get into, so we're 5.5 million tons, as we are approaching kind of that 10 million ton at existing grades of 1.53, that becomes very interesting. But I think what's important here is that it's early days in the sense that there more of these massive nickel sulfides are likely to be found. So just the nature of this type of ore body, so these komatiite type flows. So we see the disseminated, and we see that, where we're, 0.5, 0.6% nickel. From a nickel content, our resource is mostly disseminated. That gets us our 1.22% nickel, and with the byproducts of the platinum, palladium, copper, cobalt, that biases that nickel grade from the 1.22 to the 1.53% nickel. But better understanding of these komatiite flows and how the nickel contained in the magma interacts with the sulfur that's in the sediments that creates the nickel sulfides and eventually settles out. So if we can understand the flows and we can understand the channels, we can potentially find where the disseminated leads to the massive sulfides. So within the resource, we do encounter 14% plus nickel grades. They're not large widths, but when you're looking at that 14% nickel sulfide, that tends to occur at the base of that flow at the contact with the ultramafics. So the key for us is locating kind of those nickel, that nickel sulfide, kind of the needle in the haystack. So in 2014, Balmoral did drill a hole that was approximately 14.65% nickel, and that was over 0.67 meters. And that was in within an intercept of almost 80 meters at 1.43% nickel. So to address your question about the economics in terms of size, is you need a couple million tons at grades of, call it, approaching that 2% to kind of pay for everything. And I'm sure you've had many on your podcast where you talk about these objective of these high grade starter pits or these high grade areas that allow the companies to return that capital investment and make those two-year paybacks or 3-year paybacks, and then the rest is kind of just gravy on the reserve tail. So part of our plan with growing the resource is also just targeting and identifying some of the higher grade massive sulfide zones, which approach well, that's the dream is that those 14% pockets. But with the recent drilling that we've announced, that that 1.82% nickel is quite interesting, over 4.6 meters, and we believe there's more to be found at that contact, and that'll kind of drive the scope and scale of the ultimate mine as we kind of envisage. But like, we're early days in that process, but a lot more to be found. And the fact that we've got, I think a great starting point, and with room to grow. And as we lay out our exploration program, we're identifying more of these higher grade, higher nickel tenors within the massive sulfides.
Tom, with some of these byproducts, how difficult, maybe there's some comparables out there that are in operation, but how difficult is it to get out the PGMs and the copper and the cobalt, as the nickel's the primary focus, but just talk about maybe the processing complications on getting everything out of it, or do you see that that's quite simple and straightforward to do?
No, and that's a very good question, because so I laid out that nickel exploration is hard, and that's why we've got our technical advisory committee. But so nickel exploration is one thing, and nickel sulfides, finding the tons and the grade, challenging, the needle in the haystack. And then when you lay on the metallurgy, that's where things get interesting, because that's where you can have complications. And I will say, in our case, Balmoral did do some preliminary work. You can't really say it's representative because this is a resource that's growing, but the initial metallurgical testing, which everyone need to do relatively early on in a project. In our case, the Grasset resource responds quite well to conventional flotation techniques. So we can produce a high nickel concentrate. We can recover the copper, cobalt, the platinum, and palladium. The nickel is the primary focus for us, so we can produce a saleable concentrate that can be sold and then turned into the various nickel products. But nickel metallurgy, just in general, it has its challenges, but the beauty is that with our project, through a conventional flotation flow sheet, we can achieve recoveries north of 83%. And this is, again, not optimized by any respects, but also a concentrate grade that's approaching 13, 14% nickel in concentrate, which is quite fantastic. As far as when you get into the details of the recoveries of the kind of the copper, the cobalt, the platinum, and palladium, just the nature of these deposits, you don't get all of it. And then by the time you recover that to call it a bulk concentrate and then sell it to a smelter, it doesn't, you don't get fully paid for that because there are various discounts and how the offtake agreements work. But kind of in round numbers, about 80 odd percent of the value is locked up in the nickel, about 20% of the value, and that's the after recovery is adjusted for, after payability is adjusted for. There's another 20% of the value through the byproducts. But just want to kind of emphasize from a metallurgy front, and it's one thing to have the nickel in the ground. It's another thing to be able to get that nickel out and produce a saleable concentrate without too much complexity, because complexity ultimately means in the nickel space that you're just going to be throwing more capital and then just running into more variability and volatility in your product at the end of the day. And I think that's one of the distinguishing features with Grasset, in my view, and one of the key reasons I joined this group is that we've got I would say a early stage but phenomenal resource, and we've got metallurgy that makes this much more doable in the grand sense, in thinking that we're not going to need necessarily a high tech blending strategy on the ore side, and we don't need a high tech metallurgical solution. And high tech metallurgical solution, I tend to think like a pressure leach type vessels that are needed to extract the bulk of the value. And once you start getting into leaching technology, you're looking at higher energy inputs, but most importantly, you're looking at much, much higher capital inputs to get the project off the ground.
Yeah, Tom, that's good. And I appreciate you clarifying that various parameters that go into this and just the recoveries and the penalties at the smelter and these various other things that occur here before you can finally calculate that final dollar. Uh,
Yeah.
just wrapping up on Grasset here before we move on to some of the exploration stuff and some other questions. What is your viewpoint here in terms of timeline on first economic studies such as a PEA?
Yeah, I think we'd like to do another round of a drill season before we embark on a PEA. PEAs cost money, and there's time involved with this. But I think we've got within the Grasset, there's a couple things that we want to accomplish first, and that's to expand that resource and put the money in the drill bit. We do believe we have a project at the end of the day that it's inevitably a PEA heading to PFS and all the steps in between. So like to do more drilling, so dollars to be spent in the ground before further study. We'll do our internal analysis of what's needed. So we've got Grasset, but there's also the aspect of, again, thinking that this ultimately will be a mine, that we want to do some of the kind of near mine, let's call it quote unquote near mine exploration around. We have a GUC Central discovery that's about 7 kilometers away, that's only have 9 drill holes in it, that has equally exciting nickel sulfide. So expanding Grasset at the drill bit, regional, and then PEAs would be, I would targeting towards late 2024 or early 2025. Could be sooner, but there's a lot more to be unlocked in terms of value from at the drill bit.
Looking forward to seeing how that progresses. How about the Sudbury Basin exploration projects? Quite a bit of grounds there. Just overview these for us and what the main focus will be at this point on these properties, given that, as you said, about 80% of your time is spent on Grasset.
Yeah, so Sudbury, we have the third largest land package in the Sudbury camp. So we're behind Vale and Glencore in terms of the property size, over 300 kilometers squared of exploration property in that camp. Your listeners know well, Sudbury's been active over 130 years, and it's actually the second largest nickel district in the world. So it's a great place to be exploring. But with that large land package, we're under we're prioritizing our targets and how we're spending money. Our most advanced project is the Parkin offset dike, kind of on the eastern end of the Sudbury Basin. Offset dikes have been a source of about a third of the nickel production that we've seen out of the Sudbury camp. Again, underexplored. We're doing geophysics now to plan the drill program so that we can execute and add as much value as we can with the dollars we put into the ground with the drill bit. And the other one I'll mention just briefly is we'll also have a footwall target. So our Windy Lake project, which is kind of on the other end of the basin away from Parkin, and just preliminary study work about how we're going to approach the Windy Lake target. But what we're doing in Sudbury, and I think what the future of Sudbury is, these would be deeper targets. And because we are in an established camp where there is milling capacity, there is smelting capacity, you can kind of visualize that what we're doing here is exploration to kind of feed into existing operations. And so with that in mind, and knowing kind of how this kind of tolling and working with the smelters works, our objective would be for industry significant targets. And I think this is what is needed. And we got the backdrop of this favorable macro environment, but when you look at the Sudbury camp that's been active for over 130 years, industry significant in our view, and this is a real stretch target for us, is kind of that 10 to 15 million ton resource. So that's 10 to 15 million tons, and you'd be biasing north of 1.5% nickel. So how do you find that? So we're going to be using our geophysics techniques and the latest technology to search out those targets. But what we are kind of staying away from, which is not part of our plan within RCHR, is we won't do kind of some of the near surface or open pit type targets unless we stumble across one, but that's highly unlikely. But I think what we have with Parkin and certainly at Windy Lake, these would be some of the deeper targets that would be kind of starting at roughly that 1,000-meter depth. And I think when you look at the kind of the trends in that camp, they are for the deeper targets. And I think you can look to Glencore's Onaping depth deposit, which I believe off the top of my head is about 2,500-meter type project. So when you're looking at these deeper targets, you are considering much larger resource as something supportive of the infrastructure that we require in order to access that material. But you have all this existing surface infrastructure through the milling and smelting. But we're spending 20% of our time, we're spending 20% of our budget approximately on developing these targets. And I think ultimately for us, for RCHR, with this large land package, we'd be looking to monetize some of it because we, from a portfolio context, it is a bit large for us, and not to kind of give up opportunities. We think consider divesting at the appropriate time some of the pieces that we can't get to in the near term, where we can structure some deals where we have other people spend the money on things that are not as a high priority for us, that other companies might find it more interesting and to prioritize. So using Sudbury, at least pieces of our Sudbury portfolio as a piggy bank, but also moving forward some of the more advanced projects, and the Park and Offset Dike is just one example of that.
Yeah, and I was going to ask you about the potential for either a JV or monetization of some of those grounds you guys can't get to, just to help support, the core focus areas for you guys. I think that makes sense, and I suspect with part of this package coming out from Wellbridge that's something that I would expect that there'll be some other juniors to have discussions on, and market conditions are difficult, and to find ways to monetize your JV other than just issuing equity is always helpful to kind of get down the runway, if you will. Back to kind of corporate activity, just there's a mention of a potential listing upgrade over the next, maybe could call it another year or so, Tom, maybe a little bit further. Plans to get off the CSE, which has its limitations, maybe over to the TSXV, and then also just your plans to get more attention and awareness around the company in the coming months.
Yeah, so we have planned a venture uplisting shortly. Like to complete that before the end of this year. We haven't set the timeline yet, but we are on a path. And one of the things that we've done, one of the many things that we've done over the last few months is just kind of prepare for that. But that's a key focus for us. We completed the OTC listing not too long ago, but the venture uplisting is next. As far as getting the story in front of people, yeah, a key focus for us in our time and attending conferences and doing a podcast as we're doing at this moment. And I think, yeah, we're lots of plans to kind of just to demonstrate that we're, Archer is somewhat unique with the quality of our nickel sulfide projects, and that we've got something that's kind of tangible and doable from a kind of from an engineering mindset, from an industry mindset side. It's got lots of room to grow. And the metallurgy is straightforward, and then part of that is just getting the story in front of people and using all available channels. But there's also a bit of an education process, and I encourage your listeners to go to our website as we continue to add content to the website to better explain what we have. And nickel is unique in many ways. It is different from the kind of what is conventionally thought of, and we have many more comps out there in the copper space with the different types of deposits and how copper projects are moved forward. And nickel has some unique nuance with exploration, but also the metallurgy. But yeah, I encourage your listeners to head on over to our website as we further expand the kind of the content there and help with that understanding. I describe things from the resource side of Grasset, to this flow channel that was once horizontal and then vertical, but soon we'll have 3D kind of representations of these deposits, so investors can then see what we've got and better understand the words, and moving things from 2 dimensions to 3 dimensions, I think, is quite helpful. But yeah, we'll continue to tell the story to the market and let the world know that what we've got is something very unique, something very special. And where we are right now with the capital market space, it's certainly it's an opportunity for many to take a look and invest and have success, because relatively early days of this next leg of the commodity cycle.
Well, let's leave it there for now. Just one more time, another opportunity here to just mention for potential investors who are listening in. The company has a market capitalization of about 8.6 million Canadian dollars. Why should investors consider Archer exploration at this stage?
Well, we've only scratched the surface on our projects. We got an existing resource of that 5.5 million tons at 1.53% nickel equivalent, so only scratching the surface. This is not moose pasture. We're not starting from zero. We've got a 43101 compliant resource, and we're growing that with our existing drill campaigns. So there's more to come on the exploration front at Grasset. We are unique in the sense that we've got the sulfides. They're high grade. They are amenable to conventional flotation techniques. So there's no quote unquote rocket science involved with complexity on the metallurgy side. So as we add more to the resource, it just kind of expands the opportunities for the economics of what we got, and the fact that our portfolio is extensive. So there are lots of options within the organization. Grasset is the focus, but we've got this massive land package in Sudbury, which again, we're just starting to prioritize. And we've got the advanced stage Parkin project, which will be drilling shortly, and then Windy Lake. So the macro environment for Archer, nickel sulfide focus, we've got the macro environment working on the nickel side. And then we've got a valuation, which I would say is very compelling. And we've got a portfolio with room to grow, and we've got a management team that is focused on adding value. We're going to do that at the drill bit, and it's a pretty exciting time to take a very close look at Archer. We're unique, and when you comp it versus what else other nickel opportunities are out there from a all risks considered perspective, we stand very well.
And Tom, the best way for folks to reach out to the company?
Our website, Archer Exploration, we've got an info, or else just email me at tmeyer, T-M-E-Y-E-R, at archerexploration.com, or reach out to my colleague Wes, and we'd happy to answer any questions and provide information as best we can.
Tom, appreciate it. Great to have an introduction here and looking forward to tracking this, and also best of luck in the coming months. Thank you for coming on the program.
Many thanks for the questions. Really enjoyed this.